I'm here. I'm back. Yes.
Oh,
Welcome.
Spencer's coming in.
I know.
Coming in.
I know. So, yeah, I missed you guys. Neil was asking if you should set up his screen. Yes, you should do that, Neil. Set your screen for sharing right now. So we're gonna get Neil on in just a second. Neil is awesome. So this is what I like about Neil. Similar to me, didn't really know a lot about the markets before he joined Benzinga, and basically learned everything by watching and listening to other people. And there's your opening bell. That means we are off to the races, everybody.
Ding, ding.
And Neil has learned everything that he knows by watching and listening to other people, and then applying it to his own tastes, right? Finding his own preferences, what he liked, what he didn't like. And is sort of a great example of how you can sort of take knowledge from the internet and sort of apply it to your own situation. So that's why I like hearing Neil's setup or perspective, because I remember when his perspective was a lot less refined and is sort of come a long way in the last couple of years. So I don't know if Neil is ready. I'm going to bring him on right now. I hope Neil, I hope you're ready, because I'm bringing you on.
Let's do it.
Neil,
how you doing, Neil?
Neil, are you here?
Is this live?
You got it. You're live, baby. I see you, bro.
We're live all day, every day. All day, every day.
All right, that sounds pretty cool. I didn't know you guys were doing an all-day live stream.
Hey.
Yeah, we don't know what we're doing half the time either, Neil. So
one thing that I always do is I just try it and learn from it. That's it. That's all you can do.
Hey, Neil, real fast, can you just switch your microphone settings? Because I think we're picking up like your camera's mic and not your headset. So go to the bottom there and like that little setting gear and see if you can switch your audio, because I think we're picking up a different mic.
How's that?
Much better. Better. Ooh. All right. So Neil, you and I are going to just shoot the breeze here for a few minutes about things, right? About setups and about charts.
Yeah, let me do our little introduction here. Okay. So into the open, during this show, we are going to talk about the stocks that are in play today and over the course of weeks and even months that are about to break out based on their price action, based on the patterns that we see in the market. So this is an opportunity for you guys to give me your tickers, and then we'll look at them together. We'll do sanity checks. You say, hey, Neil, I think this thing's about to break out. Can you take a look at it with me? And then maybe we'll make some money together. Ideally, we'll get to the point where I have my brokerage up. I'm putting my real money on the line. And when we come to picks together, we'll trade them together, make some money. One thing I do want to add to that is every morning I'm doing some chart research, and I'm going to have some picks for you guys. I'm going to have some potential trade ideas. Today I have a pretty good one. So yes, you will get trade ideas. Yes, you will get education from our guests. Today we've got all-star charts. JC Parets joining us. So he's going to be great at 10 a.m. Eastern. I've learned a lot of stuff about technical analysis from JC, so he's going to be great to teach you guys some stuff that I just simply can't teach you. As Spencer alluded to, I'm not the perfect trader. I don't think anyone is. I'm a lifelong student, but I believe that I'm at a point right now where I'm able to pretty successfully supplement my investing with some trades to kind of boost my profits along the road. So let's learn together, let's make some money together, and let's have a lot of fun along the way. That's what this is all about.
All right, let's start with some headlines, right, Neil?
Yeah, let's get started with some news.
All right, let me get our little banner going. Yeah, we fancy. That's right. All right. Obviously, if you've been listening to our stream here throughout the day, or if you turned on the internet at all in the last 18 or so hours, Jeff Bezos stepping away from the CEO role at Amazon. Still, of course, going to be with the company. He's going to be the executive chairman. But Jeff Bezos, who founded Amazon in his garage in 1994, is not going to be the CEO beginning in the third quarter. So that's obviously what they're going to talk about all day on TV. It's the biggest news of the day.
Yep, and Wall Street didn't really care, so I'm not sharing it right now. Since Bezos is stepping in to be the chairman, he's still going to be the new CEO's boss. Right. I don't think that the stock took a really significant hit. In fact, I'm going to pull it up right now. We can take a look at Amazon right now, and we can see that it's just kind of testing these levels. No significant drop. It's a massive stock. It takes a lot to move it. In fact, they're insane earnings. Which Spencer, if you've got the numbers open, welcome to share them. But their earnings are absolutely insane. We all knew this was going to be a layup coming through lockdown over these past 2 quarters. But people just love this stock. They're staying in. And what I look at when I see this, I mean, let me know when you're ready to talk patterns, because I see a breakout coming for Amazon that I'm happy to talk about. But maybe we stick to the news and come back.
I mean, I'll give you the numbers here real fast. I cited it on pre-market prep this morning. It was a beat, a massive beat. Earnings per share, $14.09. Sales, $125 billion. You can look how that compares to the estimate or how it compares year over year. Because you look year over year, it's just as crazy, right? Like Q4 2020, earnings per share was $6.47. Q4 2021, earnings per share was over $14. So just ridiculous year over year growth for Amazon. Neil, what else was on your radar?
What else is on my radar today in terms of news? Apple injecting like $3.5 billion into Kia Motors. I'm not sure the exact figure.
3.6 is the exact figure.
3.6 billion into Kia Motors. So we're looking for a production partner for a huge brand known for innovation, known for brand loyalty and luxury, that doesn't have an infrastructure for producing cars. Looks like the goal set there is 100,000 cars produced annually with that partnership. Not sure when that's going to happen, but this is exciting to me because Apple is just a great stock. I mean, just say what you want about the whole Windows or PC versus Apple computers. Apple has just been a fantastic innovator in ways of deriving revenue from their customers, but they haven't had an innovative new product category in a long time. The last one, Spencer, we were talking about this just yesterday, but the last one was what? Apple Watch.
Yeah. Well, like the entire wearables segment, right? So Apple Watch, AirPods, that entire segment, which is growing. It's growing a lot. So don't act like it's nothing.
True. Absolutely true. So it has been very, it has driven a lot of revenue for them. But this is big. This is getting into an entirely different sector. And the fact that they're partnering with someone that has production capacity is a big deal for the stock. And it's a vote of confidence for folks that were a little bit let down when they laid off a lot of their auto engineers in the past when they first started what was called Project Titan, their first foray into doing this initial research for car production.
Yep. By the way, I should mention this. You don't drive, right?
I live in the city. There's no need to drive. I have a bicycle. Jason Raznick got me a Bird scooter for me to go to the grocery store and take dates out and so forth. I'm pretty much all set. I'm a modern man.
No, it wasn't a criticism. I was just asking. So, and I was asking because are you just gonna get a self-driving car when they're out, just to have one? Or?
I might get a manually driving car.
Okay.
Here in the near term, of course, to be cliche, I'm going to be that Tesla investor that buys a Tesla. I'm very interested in it. Although I don't know, hot take. I like the Cybertruck. It's a big jump from a Bird scooter, an electric scooter. So I'm about those big swings.
All right. Last headline before we go to the charts. We'll have JC Parets on in about 20 minutes. Ethereum.
Okay, Ethereum. I want to share my chart a little bit. So I'm gonna pull up ETH/USD. I'm gonna do a separate screen share here. How do I do that? Stop screen. Share screen.
Let's see what we got.
There we are.
There, I got you.
Okay, so we've got an upward trend, a really nice, healthy-looking upward trend for Ethereum. We saw tremendous volume coming in, driving these big steps up. That's great. That's like wildfire. But then to see that that's supported by some healthy negotiations between the buyers and the sellers, the bulls and the bears here, and then getting this final confirmation, yes, Ethereum is a currency we want to go up, we want to invest in. They're great stuff here. What I'm watching for with Ethereum is probably some more up and down here in this channel that I've drawn. Really what I've just drawn is an ascending upper resistance and lower support. Spencer, you just took a breath. What do you want to say?
No, I was going to ask you to explain like what all these lines mean.
Yeah, there's a lot here. Okay.
Yeah.
So number one is the green lines and the red arrow. I just drew those myself. So when I'm looking at a trend, you can very easily, I mean, if the easiest form of technical analysis, where is a trend going? Just draw a line right through the middle and have like the basic average slope of that acceleration. That should give you a pretty good idea. Everything else on top of that is just making you more accurate, and then potentially maybe making you think about too many things. So as we talk about technical analysis here, we're going to keep it simple and focus on price. And then, yes, bullish, we have a Fibonacci retracement tool here. So this is trading view. We are using the Fibonacci retracement tool. Without getting into too much about how markets tend to follow natural law, this tool called the Fibonacci retracement tool kind of breaks down price movement into segments that they're very, very likely to pivot at. So we can see that when I went to the bottom of this trend, which is when we had this massive volume driving us up, all the way up to where we are today, that the prices generally pivoted at each of these lines. And that's something we'll touch on as the show goes on. I don't want to spend too much time on it right now with Ethereum, but markets tend to follow certain patterns. And it's very consistent. That's why technical analysis works. And then you get wise guys like me, JC Parets, that know that, and it creates a self-fulfilling prophecy. So we're trading based on these patterns. So, we sort of reinforce technical analysis being an effective way to look at stocks and cryptocurrency.
All right, good stuff there. Let's move on to another segment. This is all very well thought out. Morning movers, right, Neil?
Morning movers, let's go.
All right, grab your charts back, Mr. Hamilton, so we can see what you're looking at, because that's why we're here. That's why I'm here. Is I want to see what is on your radar this morning, and then we'll compare notes with JC Parets when he joins in a few minutes. Let's bring your charts on. What are you looking at? What is this?
All right. So let's talk about the soup of the day. We've got Amazon.
The soup of the day. Okay, I'm into it.
Yeah, I don't want to say it the French way. I like the American way. Soup du jour. So what we got here is a fantastic looking pattern. We had the bulls coming in, driving Amazon up like crazy over the past 3 months here, at least from April to October. And then we're taking a breather. And we love it when traders take a breather. Why? Because that gives us an opportunity to get in, to time an entry, and set a target price. So we're starting with Amazon. Amazon is a massive stock that's going to have some degree of inertia. So take my really high price targets with a grain of salt. What I will say is that if I'm setting a really high price target, and I'll show you in a minute how I do it, that it could take another 3 months for it to resolve. But nonetheless, there's a very high likelihood when we have the pattern that I'm going to describe today, very high likelihood that it will resolve. So what we're looking at right now is an ascending bullish triangle. So I'm just going to draw that up for you. An ascending bullish triangle characterized by upper resistance horizontal and then higher lows going forward. Now, this is especially interesting because we do have this period of just tremendous trend upward. going into that. I told you take a breath, Spencer. What do you want?
No, can you just tell us like what time frame this is we're looking at here?
Yeah, absolutely. So right now I'm looking at the weekly chart for Amazon. And something to keep in mind when we're looking at these is that the longer it takes for a pattern to form, the more powerful the breakout is. So we're looking at a bullish continuation pattern, a continuation of this trend. So when I'm looking at this thing, what I see is first a price target that's derived from what's called the swing high added to the swing low. So I want to measure the height between these 2 points. And that gives me about $526. All right. So now I'm actually going to add that to my resistance line. It looks like this thing is already starting to break out a little bit, but we'll get into exactly how to play that. And then, guys, if you guys already know these breakout patterns, you might be doing this more aggressively. Some of you might have already entered it around here. Totally fine. I'm going to stay conservative for the sake of just being safe for folks that are newer to this. So I'm going to add this value. So one way I like to do that is I just draw a line here. And then I'll add that right here. And this is approximately my price target. So we take the measured move, which is the swing high and the swing low. We add it to our upper resistance, or our breakout level, in other words, and we get our price target, which is about 3938 right here. That's a conservative price target for Amazon. So what we're looking for is a good break above this. I personally like to see a close above this on some time frame. So if I come down to daily, I want to see a solid close above this resistance level before I enter to confirm that, okay, the bulls are ready to take this seriously. The bulls are ready to push this thing. Another thing that I'm waiting for, in addition to that close above this resistance line, is strong volume. Look at this previous spike in volume. We want something that stands out like that for a real breakout. Okay, it might not happen today, might not happen tomorrow, but within the next couple days, if it happens, that's breakout potential. We don't want it to get too far over here into the little corner of my triangle. So that's the first price target. The next thing that I would say is much more aggressive with Amazon is you can actually take what you call the pole here. So if you think of this like a pennant, you can take the pole and you can add that to the breakout. So we take this bad boy, we add this to the breakout, and then we have a price target of about 5,087. This is the type of thing that will probably take a while to resolve. But I mean, if you get in there, you can trade it all along the way, trade those ups and downs, and expect a healthy resolution of this ascending triangle. How's that?
That was fantastic. Thank you. I was trying to absorb as much as I could while also reading the chat. But that was so okay. So what is the price target?
Yep. So I would say a conservative or short-term price target for this is 3949.
By when?
It's tough to time, but I would say that you can expect this, like I would say reasonably in a couple, like maybe a week or two. Okay. For resolution. It depends on the volume. So what we want to see is that huge surge in volume. And if we get that, then, I mean, look what we've done in the past. These are massive candles. So we can see a pretty quick resolution there. But the more times that a resistance level is tested, the more likely a stock is to break out. And we've got that. So
why are you using a weekly chart out of curiosity and not any other time frame? A daily, an intraday, a monthly? Why weekly?
So each level allows you to see what's happening with different degrees of clarity. Yeah. I'm using a weekly with Amazon because that's the time frame that we're dealing with. I mean, we're dealing with a base of an ascending triangle that essentially started in July. That started in the summer, right? And then we're getting toward a breakout point of February 1st, 2021. So when we're dealing with these time frames, you can even look at months. Like I have Sony on here that I want to talk about. I think Sony is going to have a big, massive move if it hits previous all-time highs. And that's because it's on like a 5 or 6 year rounding bottom pattern. So big swings there.
You want to go to Sony next?
Sure. Let's do Sony.
All right, they had earnings this morning. I do not believe those numbers are comparable to the estimates. There must have been some adjustments there because their earnings per share was $2.85 versus an 80-cent estimate. That's not comparable. Sales is more comparable, 25.8 versus $24.8 billion. So they beat that number. They said they shipped 4.5 million PlayStation 5 consoles last year. Gaming revenue is up 40%.
Yeah, I mean,
oh, wait a minute. They're also changing their ticker.
Really? Are they
Yeah.
changing it to Sony? S-O-N-Y?
Yes, they are.
Okay, that's awesome. Because this seems like, I don't know, that reminds me of Super Nintendo. Confuses me every time I see it. SNE.
Yeah.
Okay, so here's what's interesting here. One massive candle. You kind of, I mean, if you really follow the fundamentals with Sony, you probably could have guessed. I mean, damn, we just had the PlayStation 5 come out, and it's like no one can get a hold of it. So Sony is going to have great sales. I mean, they're a gaming company during a lockdown period, so plenty of people are investing in entertainment. But look, we've been on a healthy upward trend, just like most stocks in the tech space during the period that I have here. But if we go back, we see that all the way back. This is a long time ago, guys.
Well, tell it because your axes are a little small. So tell us how far back we're going.
Yeah, so we're going all the way back to 2000. This is exactly this time in 2000.
So like
all right,
.com peak.
.com peak.
Yeah.
Dear
Lord.
Previous all-time high. I would not take this as an omen that we are going to return to the .com bubble. I would take this as a hopeful point that if we reach it, very good things, big swings are to come for this stock. Really what you have is a little bit of movement to do here. Who knows how quickly Sony can do that? I mean, they've just entered the cycle of their new generation console. I don't know much else that they're doing beyond that. I know that their movie business probably took a pretty big hit due to COVID. I mean, I imagine that it's tech that drives most of their sales. Do you know, Spencer?
Well, the one thing I'll say about Sony's revenue, if you can look at it in Benzinga Pro, they're a very slow growth company. Sony's kind of like let me see if I can get their P. They're kind of a value name, so it's not like a high growth name. So their revenue it's not growing at the clip of Amazon, and it really hasn't. And that's partly why you're seeing that.
I mean, look at this
that long term chart.
It doubled since March 2020. I mean, it doubled in a year.
Oh, please. Yeah, so did my own IPO. Spencer Inc. doubled since March. But
all right. We are in a very, very bullish regime, so it's pretty easy to do that. At any rate, the point that I'm trying to make is if this resolves, so we've got tremendous growth potential here for Sony. This is not super interesting because it's not happening in the immediate future. But what you can see here is a nice rounding bottom. And when you have long-term rounding bottoms, just like we had with Bitcoin, once you hit that resistance level and you break through, you can look for something along the lines of the base to that resistance level as your additional breakout. So that's where we'd be looking at Sony at 307 following a breakout at this price level.
Wait, Neil, I think your Bluetooth just disconnected and you're back to the other mic. Can you go back in and check your headset?
Yeah. No, the mic looks right. Does it still sound funny?
Yeah, we're getting some feedback, some background noise, some fuzziness. Maybe check your battery on the headset. I don't know.
Yeah, I'll plug it in.
That might work a little better. All right, rolling with the punches here. Rolling with the punches.
How's
today. It's okay.
All right, so we'll deal with it. That's fine.
They're saying you sound fine. Maybe I'm just a curmudgeon. All right.
You are that. You for sure are a curmudgeon, Spencer.
Yeah.
You're my favorite curmudgeon, though.
All right, appreciate that. What's next on the list?
What's next on the list? I don't want to spend too much time on this because we've got 7 minutes until JC Parets joins us, and I want to take tickers from the chat. The one that I really want to, we can come back to this. I might give you a little teaser. I know we want to get to Neo. The one that I'm interested in right now, this is one that I'm going to challenge you, JC Parets, when you come on this channel. If you can find a more interesting and more likely breakout trade idea, you win, and I'll give you I'll give you a 2 liter of Fago, which can only be gotten in Michigan.
He doesn't
So
want that.
a unique. It's a unique gift from me. He knows that when I put thoughts into gifts, that it's more than that means the world to him. So I'm gonna show you what it is. I'm not sure if this is on anyone else's radar. I haven't seen it in the chat so far. If anyone can guess what this tech company is, if there's anyone that can guess what this tech company is that's forming a bullish continuation pattern, let me know. It starts with an A.
Wait, that's your clue? It starts with an A.
That's it. That's all I'm going to give you.
It starts with an A, and it's got to. So you're looking.
Okay, they're used by creatives.
All right,
their customers are creative.
It's a tech stock that starts with an A.
Yeah,
you got to go through every tech stock starts with an A. All right.
It's not Apple.
Oh, and it's got to be. I was thinking Atlassian, but that's Team. So wait, so is the ticker A or the company name A? Or
it's Adobe, ADBE. Come on.
All right, Potter. Hey, we got one. Potter, here you go. Potter got it.
Potter got it. All right, so we'll send it. Well, Potter, we're gonna send you some swag. Email neil@benzinga.com for some swag. All right, Adobe forming a classic bullish pennant, guys. Looking good. We do want to see some volume come in. We don't see any particular volume coming here, but that's because this breakout pattern has not resolved. So let's go from the top here, and let's go from the first swing low here. And what we formed when we do that, if I can get this chart right, is our upper resistance slope, our lower support slope, and our apex, which is where those two lines meet. Right about here, 50% to 75% of the way through that pennant pattern is where you want to see a breakout. If it goes past that, if it continues to squeeze between the highs and lows past that, it becomes very unlikely that it's going to break out. So I like this one. I'm giving JC a chance because I'm not really sure. I'm not seeing the momentum here. And in fact, I'm going to pull up my RSI. I can spell relative strength. And see that there's not a tremendous amount of momentum here. We're right about in the middle. But if we do see a surge, we're looking at a breakout here. So when we're doing this pennant here, what we're looking for is something along the lines of the swing high to the swing low for a conservative gain of, what is that? Is that $95 for a conservative gain from the apex? Boom, to like right about there, 573. So that'd be from the breakout point. So if we see a solid breakout, we enter, we sell. Then if you're really seeing some momentum, if the volume is supporting it, and we're getting into the 70 on the RSI territory, then you can take the height of this pole, and add that. So that's your second target. So that's where I like to use the line tool. Go to the bottom of the pole, go to the top, and then I'm just going to add that to the apex. And then that gets us to about a $768 price target, probably over some time where it would go up like this.
All right, off topic, but someone in the chat said they want swag too. So okay, go to swag.benzinga.com. And
there you go.
There's all the swag you could want, all the Benzinga swag you could want. All right, 9:57. We're gonna have JC Parets joining us in a couple of minutes. Do you want to do some more stocks on your list?
Nothing else on the list. I want to take some from chat, guys. Drop in. Yes, the bull flag is very reliable. We love to see it, and there's a ton of bull flags right now. Guys, drop your tickers into the chat, and we will look at them. Let me know your thoughts when you drop the ticker.
Well, so I saw one that it's actually two birds with one stone because it's on your list and in the chat. Can I do that?
Yeah, Neo. Yeah, that's right. Okay, so looking at Neo, what you're going to see with a lot of stocks right now is going up. So let me get my little paintbrush. Is like a crazy trend upward because right now the markets are insane, and then like a little thing. It kind of looks like a shepherd's stick or like a cane, and that's because of the sell-off.
Is that the name of the pattern, shepherd's cane?
Yes.
Okay.
So I'm going to delete that. Let's zoom in. So the reason I'm zooming in, I'm going from the weekly increments. I'm going to zoom in so I can see a discernible pattern, so I can understand what buyers and sellers were doing, how the argument was going. And what we can see here, let me get rid of my paintbrush tool, is a nice. Well, I mean, it can be argued that this is somewhat of a double bottom here that was resolved when it broke past this previous all-time high. And then actually gapped up, which is really nice. But it looks like the gap got filled and we went back down. I am bullish on NEO, and it would if I zoom in a little bit, I want to look at this on a smaller increment. I think there's a good argument to be made that this is a descending triangle.
Yeah, I see it.
Let me move myself over here. I think there's a very solid argument to be made for NEO as a descending triangle. I was trading this one previously in 2020, and it is a very technical stock. So this is one that all of the other technicians are watching. At least our price action has shown that. So if I zoom out up here, let's start talking about targets. So what you can easily do is take the swing high and the swing low as a measured move, and then add that to the breakout as your price target. So what we can look at is from the high to the low, it's about $11.40. Now let's add that to what could be the breakout. So if we look at a breakout, we want it to be between halfway through the triangle to about 75% through. So let's go ahead and be conservative and draw it from 75% through. And what was that, like $10? Yeah, I think that's about right. So about $10, we'd be targeting about 69 LOL as our sell target, but we want to get that confirmation that it's broken out. Now you can also be more. I think with NEO you can safely do this. You can also be more aggressive and have a secondary target. So as long as you've got a good trailing stop loss, or if you're watching it all day, just use a regular stop loss from the base of the pole to the tip of the pole. Let's measure that from the apex, and then you're looking at a price target of about $79, which I think we can very easily get to with NEO. Again, we're looking for a close above this resistance slope with high volume spiking up. All right, guys. That's NEO. I think that's all we have time for, though.
Yeah, so there are people that like charts. There are people that love charts. And there are people that see charts in their sleep. I think JC might be the latter. JC Parets, he's from All Star Charts. He's making a weird face now. JC, do you not dream of charts in your sleep? Oh, wait a minute. You're on mute. Hold on a second. Let me unmute you. Oh, this says your mic's not connected. Hold on. Your mic's not connected. 1 second. Get your mic connected.
How's that?
Very much better. Much better. Okay.
What's up, Neil? Long time haircut, huh?
Long time, man. I'm so glad you're able to join us so you can correct me on all my sloppy charting.
Oh no, all good. The other day I was laying in bed and I was like thinking about this chart and I was like, man, I wonder what that looks like. And I like wrote it down, and first thing in the morning I woke up and that was the first thing I pulled up. Something had to do with commodities, I forgot. So yes, I do dream about charts. That is true.
Okay, is this a particular commodity that everyone might be talking about right now?
To be honest with you, I forget off the top of my head what it was I was looking for. I think it was like a ratio chart of like the CRB index relative to something else. I forget off the top of my head.
Okay, fair enough. So
it's a lot of charts to keep track of, Neil.
JC, I know there's so many charts. It's too much. One thing I want to let you know is that I have thrown down the gauntlet. I suspect that Adobe is going to break out here in the next couple days. I like the company, and I like the pattern that I see with Adobe. So my challenge to you is, can you find another bullish continuation pattern that you think is interesting, that might have more breakout potential?
Yeah, Neil, what you're doing here is absolutely brilliant. I got to tell you, not to kiss your ass or anything, because I'd rather bust with your balls, to be honest with you.
No.
But you nailed it. You absolutely nailed it. And more importantly, I don't even think you realize how much you're absolutely nailing this, because you're so money. What's that movie? You're so money, you don't even know it. You're so money, right?
That's Swingers.
Swingers.
You're so money. You're so money.
You're so money. But here's the thing. People are like, JC, we're in a bubble. JC, you're being too much complacency, JC, is what they tell me, right? But then I'm looking at the biggest companies in the world: Apple, Google, Microsoft, Amazon, Facebook, NVIDIA. They haven't done a damn thing since the summer. add Adobe into this list. So monster company, the right space. It looks like all the others. You want me to tell you other names that look exactly like this? Okay, here we go. Microsoft, Apple, Amazon, Facebook, Google, Nvidia, Netflix. It's the same pattern. The mega caps were the leaders. They peaked at the end of the summer, early September, particularly on a relative basis. Micro caps, small caps, mid caps took over. These things freaking ripped. They left the mega caps behind. And now I think we get that rotation, that mojo back into the megas. And I think you absolutely nailed it with the Adobe.
All right, excellent. So I see you cleverly avoided the challenge, and that's fine. That's fine.
What was the challenge?
What do you think is going to break out more than Adobe?
Well, it's not so much that they're going to break out more than Adobe. I think it all happens simultaneously.
Okay, so you just gave me like a whole bunch of stocks instead.
Yeah, it's the same. Okay. I think it's the same trade. I think it's that mega cap rotation coming back. I think they all break out simultaneously, Adobe included.
All right. I love it.
Will you let it slide?
Yeah, I'll let it slide. I think it's a win for me, but I'll let it slide. So JC, you pull up charts all the time. I've seen you on other shows. I've seen you on your own stuff. I've also taken your courses. You like to look at market breadth. You like to look at emerging sectors. You like to get an idea of what's going on based on that, and then maybe zero into some stock opportunities. What do you have in store for us today that'll give us an idea of what's going on in the markets and where the opportunities are?
Well, how much time you got?
You got about 20 minutes.
Oh, wow. So we got a long time. Well, listen, am I sharing screens here? What are we doing? How's this work?
Here, let me stop my share. Yeah, you should be able to click share screen at the bottom.
Yep. Just share your screen there on the bottom, JC, and then we'll be able to see what you're seeing.
Let's see. Hold on. Pull this up. So many charts, so many slide decks,
So little time.
So little. Only 20 minutes, they tell me.
That's what they tell me too. Here we go. All right, all-star charts. We got you. Let's see what we got.
So this is the thing. So you want to talk about what's happening from a global macro standpoint, what's happening from investor sentiment standpoint. The truth is people are scared to death, man. I don't know what everyone's so angry about. Stock market's making all-time highs, not just in the United States, but all over the world. The world's never been a better place. Healthcare breaking out to new all-time highs. Technology, consumer discretionary, communications, internet, all across the board making new all-time highs. And for some reason, I don't know why, people are angry. They're so angry. They're so scared. They're so bitter. In fact, they're so scared. They have never been this scared ever in history with the S&P 500 this close to all-time highs. It's never happened before. I can't think of a more bullish combination. Buy stocks and shut the hell up is basically how I see it.
Okay, I love that. So why do you think everyone is scared right now?
Because I think they want to be treated like infants. They've been used to getting 7th place trophies. They think that the world owes them something. They don't like the rules. They don't like the rule makers. They don't like the brokers. They don't like the people taking advantage of the rules. They don't like people taking advantage of them. And they'd rather cry about it than go do something about it. That's how I see it. It seems quite obvious. People are angry and bitter, and they say that you shouldn't kick someone when they're down, but that's actually the best time to kick someone when they're already down. So I think that's what we do. We kick them. And I think the pain trade is up. I think what's going to hurt the most amount of people is the market going higher. So that's what we want to bet on, and I think that's the higher probability outcome, and it's going to hurt a lot of people who aren't in the market because they're so scared, because they're waiting for their 7th place trophy. Okay,
we love to hear like this very confident perspective on us maintaining a bullish regime across the markets. So
I don't even think we've gotten started. How about that? Europe is flat for 20 years, hasn't even broken out yet. The U.S. Financials Index is flat since 2007, still hasn't even broken out yet. People are telling me we're in a bubble. These are some of the most important indexes on earth, and they haven't even broken out yet. Like, I don't even think we've gotten started. When the S&P is at 4,500, when the Dow Jones Industrial Average is at 38,000, then maybe we could talk about some complacency.
Okay, so folks that are leaving cash on the table, according to JC, and actually my own personal opinion, probably leaving gains on the table as well. Or did I say that right? If you're in cash right now, stocks are looking really, really good. So JC, when we're looking at the VIX, what do we got here?
So we talked about the VIX, right? People are scared. They're buying insurance. And when people buy them up, think about this here. When people buy the most amount of insurance ever for no reason, does that usually happen right before people are happy that they bought that insurance? Or does that normally happen when the insurance wasn't necessary, right? I think it's when it wasn't necessary. So here's another thing that I think investors aren't prepared for and they're about to get steamrolled is the beginning of the new commodity super cycle. I think the beginning of the commodity super cycle has begun. I think commodities are going to rip. I think if the CRB index is above those 2016 lows, I think if crude oil is above all of those former lows over the past 5 years, right? That head and shoulders top neckline, if you will, right? This whole thing right here. If we're above that, man, call it $40. That's the level. If oil's above $40, if CRB is above the 2016 lows, the squeeze is on. Commodities are going higher with or without you. You can cry about it, that inflation's hurting you and the things you're buying are getting more expensive, or you could take advantage of that for your own selfish reasons. I'd rather do the latter.
Mm-hmm. Mm-hmm. So what are we looking at right now? The CRB index, is that covering all crude oil?
Well, CRB index is energy heavy, so let's call it a third of the CRB index is energy for all intents and purposes. But the CCI index, which is an equally weighted commodities index, looks exactly the same. Maybe not exactly the same, but looks good too. The agricultural names, base metals are making new 7-year highs. Like every commodity is working except gold, right? I think that's bullish of equities, right? The commodities that are risk assets, base metals, copper, lead, zinc, aluminum, tin, right? Nickel. These are making new highs. Gold is not, right? Agricultural commodities, energy commodities, oil, natural gas, unleaded gasoline, heating oil, making new highs. Gold is not. If it was the opposite and commodities are getting crushed and gold was the one shining, see what I did there? Then we're having a different conversation, but that's not happening.
Okay, so 2 questions. I don't know if these are the charts that you got, but I'm curious about your perspective on Bitcoin because you brought up gold not really moving. So I'm interested in the new gold. Yeah. Okay, let's talk.
Well, it's not a downtrend.
No, absolutely not. So this is what I was talking about earlier, guys. When I was talking about we had a really long period of time where we needed to do some consolidation. We needed to digest that previous all-time high. But then once we reached it, that was a resolution of a big double bottom. Would you call it a double bottom or just a rounding bottom, JZ?
That's a Kardashian bottom, right?
Boom.
The bigger the base, the bigger that bottom, the more explosive the resolution.
That is what we like to hear. So we had a Kardashian bottom here.
There's your Kardashian bottom in Bitcoin.
Beautiful, beautiful. Okay, so what is the outlook here for where we are today?
I think we go to 45,000. I think if we're above 30,000, 29,500, that's really that zone. If we're above that, I think you're fine. If we're below that, I think that's a big problem. And I think that there's opportunity costs. I think there's downside risk. A lot of bad things can happen if we're below that level. But if we're above that floor, I think we're good.
Okay, I love it. And you're using, are those fib levels here that you have for, yep, so those are Fibonacci levels. You guys saw me use those earlier on Ethereum. Just to, for confluence there, guys. Okay, what else is interesting? Do you have silver in particular?
I do. Let's see.
And while he's doing that, guys, just a reminder, please, if you like this content, let us know by hitting that subscribe button, hitting the like button, and the little teeny tiny bell so you can get notified when we come on, so you don't miss out on this free, awesome content.
There's your silver, baby.
Oh, okay. Okay. I like what I'm seeing here. I really like what I'm seeing here. Would you mind sort of walking folks through?
Sure. So for you newcomers, before there was Bitcoin, before there was the Tesla cults, right? Like these cults, the Reddit cults, right? For good or for bad, they're big groups of crazies, right? For all intents and purposes. Before all those crazies, we had the silver crazies. Like these guys were bananas. And like you guys who are old enough to remember 2010 in particular, these guys were these guys were ridiculous. They were more obnoxious than the Bitcoiners. They were more obnoxious than the Tesla Qs or whatever. They were the worst of the worst. And actually, they got, after silver obviously peaked and then lost 80-something% over the next couple of years, they got carted off in stretchers. They made a lot of money on the way up and then lost it all and then some on the way down. And we never heard from these people ever again. It's like the equivalent of like, I don't know, like Pump and Raul Paul and like all these guys just disappearing overnight when they were wrong. Like that would be the equivalent, right? Like these cult leaders of certain trades, whether it's a gloom and doom trade or a Bitcoin trade or a Tesla trade, but like the cult leaders of silver just disappeared.
Are they coming back? Are they about to come out of the shadows?
I don't know. Probably not. Like, I think they just gave up with life. I mean, I don't know. But anyway, that's just the history of this. Okay, fine. So as we learned from my predecessors and the great Luis Yamada, the bigger the collapse, the longer the need for repair, right? And now here we are a decade later, and I think the repairing has been done. So notice here how there was support, right? So this level right around here, around 27, it's not JC's opinion. It's not like technical analysis. It's not like voodoo. Like these are just facts that there were more buyers than sellers at this price, right? For a good couple of years. Like that's just what it is, right? There's no arguments here. So more demand than supply, more demand than supply, more demand than supply, more demand than supply, boom, break. So what happens when we broke below that? That is the market acknowledging that the supply was finally able to overwhelm the demand, and that's why prices fell, right? Because there was more supply than demand for silver at the time at that price. So collapse. There's your double bottom, right? See that? One of the most epic double bottoms ever, right here in silver. And then we rip, and then we get back to that level. So that former support turned into resistance, which is what they teach you on the second day of technical analysis kindergarten. Like, this is just pretty basic stuff. And sure enough, that's the market acknowledging that overhead supply. That was our target on this breakout, right? That's where we were buying silver. Our target was 27 because that former support, in theory, should have turned into resistance. I didn't know whether it was or whether it wasn't, but I had a suspicion that all of that support would eventually turn into resistance. Sure enough, it did. Now, at the time when we sold silver, I didn't know how long it was going to take for demand to absorb that supply. Maybe it was a month, maybe it was a couple of weeks, maybe it was a day, maybe it was a few quarters. I didn't know, right? That's just the market needs to do its thing. As it turns out, we're going on about 6 months now, and it's right there. The more times that a level is tested, the higher the likelihood that it breaks, and I think it's coming. We had a little bit of a false start earlier this week, right? Maybe, I think that was a false start, but I think it is starting. And if silver's above 27, I think you can own it. And listen, it's right there. It's in that gray area. So, manage your risk, however, based on your own risk parameters and whatnot. But this is, if we're above 27, I think we see 35. Ultimately, I think we go back to those all-time highs.
So, hey, JC, so when you see a little bit of a break above that resistance, and it starts to look like a failed breakout, and then we see it testing it again, are you still taking into consideration that previous sort of rounding bottom as your price to create your price target, even if it's doing this little? Okay.
I'm looking at former resistance, which are these levels right here.
Got it.
So you see on these bounces, they failed up here.
Mm-hmm.
That's where I think we're going, right? And then you want to know something? Let me just show you exactly, because look at silver. Engrave this picture in your head, right? Stare at it, like engrave it in your head, right? Because now I'm going to show you something else. This looks exactly like silver. There's your crack. This is silver in 2010. These are the silver crazies getting carted off on stretchers, right? Here's your double bottom. Here's your support. So this is silver in 2011, 2012. This is silver breaking in 2013. Here's your double bottom. Here's silver right now acknowledging that former support. Notice how it was messy, just like silver is now. And then it broke out. But here's what I'd like to point out. Remember I told you how in silver, that 36 level right around here, that 36 level right around here, the market should acknowledge those levels? Well, Ethereum did not, right? You see that?
Mm-hmm.
Ethereum did not. So this is silver right here. This is our price target in silver short term. Notice how Ethereum didn't care about JC's price target, because this was my same price target for Ethereum for the same reasons. And then ultimately thinking we get back to the highs, which I do in silver. So this is your roadmap for silver. Now look at Ethereum. Now let's go back to silver. See that? Come on.
How do you explain that? Yeah, they do look identical. So yeah, chat. This is silver, and then he was flipping to Ethereum to show that they were doing almost the same thing on their charts. They were making the same shape over time. So JC, what do you say to people when they look at that and they say, "So what? Like, how did that happen?"
How did what happen?
Why do they look the same?
Because that's the way humans are. Like, we're crazy, man. Like, we're insane. Like, we're nuts. You know, but what happens between the ears when there's money involved is bananas. So that fear and greed, whether it's silver or Ethereum or Apple or Microsoft or Adobe or AMC, right, GameStop, it's what happens between the ears, right? And the beauty of it is that most people are unaware of those behavioral flaws. Us as technicians, that's our area of expertise. That's our arbitrage. So it's not like we're special that we don't have those flaws. We do. But acknowledging those emotions and understanding that we cannot act upon those emotions when they come is the arbitrage. And not only that, I'll take it one step further. It's not like we have to be so good. Being just a little bit more aware, being just a little bit more understanding of how we behave as humans compounds over time. So it's not like we have to be so good at this behavioral finance. We just have to be a little bit better than the rest.
That's a beautiful thing. And that's, guys, one of the foundations of why all of this stuff works. Human behavior has not changed over the past however many thousand years.
And you can educate people all you want, you know, right? Like, it's like, oh, people need more, more financial education so they don't make stupid mistakes. Those people are morons. You could teach them, you could make people get PhDs before entering their first trade. They're still going to blow up. They'll probably blow up even faster.
Yeah, you're not going to argue with that. JC, one more chart before you take off?
Sure. What do you want? What do you look?
What's the most interesting thing right now? I mean, I think silver is very interesting. I think the commodity super cycle beginning is probably. I mean, you started off with a huge bang. Let's keep it on cryptocurrency. So you've done Bitcoin, you've done Ethereum. What do you have any other cryptocurrencies that you're interested in?
Yeah, I'm interested in all of them, really. You know, we can do a whole crypto video if you want, but you want to talk about something important. This is probably the most important chart on planet Earth right now. You can throw this one and the Euro Stock 600, which is the S&P 500 of Europe. Both of them haven't done anything for decades. Europe's flat for 20 years, and financials are still below, as you can see here, still below those 2007 highs. See that? All of this is overhead supply. But the way I learned it is that the more times the level is tested, the higher the likelihood that it's going to break. So I think a breakout's coming.
All right.
And then let me show you why. Here's your financials. The more times the level is tested, the higher the likelihood it's going to break. And then here's your broker dealers. They've already broken out. So I think that's the leading indicator. Boom. And by the way, when I say broker dealers, there's a lot of exchanges in this index, yeah. Which those are the leaders. ICE, NASDAQ, and not the Qs, NDAQ, like the actual company, the NASDAQ. ICE, CME.
So, JC, this is a lot of great stuff. If folks want to learn more about the way that you do things and perhaps even get some of these charts that you've done up, where can they find more?
Yeah, you can find me on Wall Street Bets on Reddit. No, I'm just kidding. You can find me at allstarcharts.com. Allstar Charts on Twitter, Instagram, StockTwits, YouTube, Benzinga, Allstar Charts across the board.
That was very funny, JC. I laughed very hard at that. I laughed perhaps too hard.
I believed it for a second, so because I'm gullible. All right, JC, thanks so much for spending time with us today, man.
Thanks a lot.
Razzing, I say what's up.
All right, we'll let him know.
Later.
All right, that was very good.
Yeah, I'm glad that you like that. I mean,
Yeah.
I mean, good stuff leading into that. All jokes aside. All right, chat. Now I want to take the final 7 minutes for this segment to take your tickers and just pull them up on the chart and we'll talk about them. So just
All
drop
right.
some tickers and we'll walk through them.
Do you have a wheelhouse, Neil, or do you look at the whole universe of stocks? Like, do you exclude OTC stocks, for example? I'm just hypothetical. Or do you exclude stocks over like a certain price, or no?
I would say OTC stocks I leave out.
Yeah.
Unless there's something that I have really easy access to, and I know the company's not full of shit.
Yep.
And then I mean, so it follows with like really low price stocks. So if there's like crazy price action on something, and I have a suspicion that it's probably just a bullshit shell company, then I'm not going to waste my time on it, and I'm not going to risk my money on it. So when I'm screening for these stocks, I usually start like 10 and above. But I'm willing to take, I listen to everything. I listen to chatter on Twitter, stock twits. I look at the Benzinga Pro chat. And when people are talking about stocks that seem to be very interesting, I do take a look at them.
All right. Bunch of tickers flying in here. Let's do as much as we can in the next few minutes. Give me the short term on Palantir. Short term outlook on Palantir.
Palantir's going
PLTR.
I can just tell you off the top of my head, Palantir's in a downward trend that we would need to see reversed.
Also, grab your charts back so we can see those.
I don't need a chart for that. So I'm gonna share my screen. All right, fine. Chrome tab. I love Palantir, by the way. I made a bunch of money with Palantir calls because they had a recent breakout, and they were also reinforced by message boards. So we're gonna open up.
Bada bing, bada boom. There we go.
So we got this boy. All right, so we're gonna look at PLTR.
Oh, you've already got lines and everything.
Yeah, so this is where I got in. So Palantir, I was very happy with what we had. But guys, this is a pattern that we already talked about today, man. This is a bullish pennant. So it was the pull, and let's look at the resolution. Let's see how on the money I was with my price targeting. So from down here to about the apex, and look at that. So my price target was about $40. So I bought some call options and I made some money on that. And as things were going up, those got quite expensive, and I was able to resell them for a profit. Now, when we look at Palantir, look at this. This is a full-on downward trend. If there were some green candles in here, or some some positive candles for the folks that aren't able to tell, I would say that could be a descending bullish rectangle, but it doesn't really look that way. It looks like we just entered a downward trend. So if I'm gonna switch this to 4 hours for more of a swing trader perspective, this just looks like a downward trend. And so really what we have here is big upward trend and then downward trend that would require some type of reversal pattern, whether it's like a head and shoulders or some type of rounding bottom, to start breaking past this level, to look at some kind of return to an upward trend. But right now we're in a bearish regime with this ticker.
All right, James Adams asked nicely. He said, "Please look at BNGO."
Yeah, for sure. I was looking at that earlier.
Yeah.
So BNGO looks kind of like what I was talking about. So actually, I said it wrong before. I said like a cane, but a lot of them are doing like this. But like every single chart looks like this right now. BNGO I really like. BNGO I know is genomics. Yes, bio nano genomics. I'm very interested in genomics. They've gotten choppy lately. CRISPR as well. But I'm very bullish on the space in general. But I mean, if we look at this thing, guys, let's go ahead and use that Fibonacci retracement tool. Let's start here at the very bottom of the trend, and let's bring it to the high that we've reached. And we can see that most of these pivots are occurring at about these levels. And then actually, if I adjust this, you can probably get even more, even closer to them, to get an idea of how you might time something. Oh shit, that's not what I wanted to do. I want to do this. So like that fits in pretty well. I'm looking for something that's more like that maybe. Yeah, this is the closest one. So starting at the $2.96 point, we can see that we hit this retracement level, bounced, and actually broke through, looking pretty good. Really with BNGO, I believe in the stock. I like the company from a fundamental perspective, from a sector perspective. What I will say about what it's doing right now is that we're going to need to see, look, we tested this already. We're going to need to see a breakout, or we're going to need to see a breakthrough of resistance at that 1383 pivot point, which is the all-time high for the stock. You can see that it tested it at the full body of this candle right here. So we're trying. The bulls are here, but we're going to need to see a surge in buy volume, which just might come in. I mean, we're looking really healthy down here. If we were looking at the stock and it was, you know, closer to 30 and starting to get into like the sold range, I'd be saying just turn around and you know, either forget about it or wait for something different to happen. But with BNGO, we're looking really healthy, sitting pretty at about an average of 58 or 60 on the RSI. That means that we've got momentum behind this thing. I do believe that we will return to the 1383 and hopefully break out. If we do that, go ahead and pile in, but keep a trailing stop loss. What I would do with this, I would pile in, and you know, of course, don't do this. This is not financial advice, but what I will be doing myself is piling in once we break through that all-time high, and then maintaining a trailing stop loss of about 1% and watching it closely.
Let's do a few more here. Let's look at plug power.
You got it. Yeah. so plug's awesome. I mean, all stocks look like this. I mean, JC was absolutely on the money. So what we look at here is really, I mean, again, this is a pennant. Let me look at it on a daily actually to get a better picture.
And also,
yeah, we just had a monster candle.
While Neil is doing that, I've heard your feedback. We will make sure going forward that the charts are easier to see. The axes and that are much bigger. But
yeah. Let me do this. Does that help?
A little bit, marginally.
All right, sorry guys. Yeah, so I think a bull pennant here. We've got the apex forming right about here, maybe down a little bit, right about there. So what I would be looking for is a breakout really soon, like today or tomorrow. Otherwise, it's going to look like it's going to continue trading sideways, and who knows what's going to happen unless there's a significant catalyst. But what I'd be looking for is a conservative price target of this base or this swing high to the swing low plus the breakout point. So that's going to be, let's go ahead and just draw a line, something like that. Added to the breakout, so you would set your buy target at that point where it closes above this upper resistance line, and then hope for a sale price of $85.
All right, let's just do one more fast. I know we're supposed to get off here for our next crew, but let's look at Hyliion. I don't make too many.
How the fuck do you spell that?
Hyln. I don't make too many trades, but I traded this one successfully last year. So this one has a warm place in my heart because I wanted to hold it for a long time, and then I got psyched out by some gains, and I cut it and ran. But Neil, give us your thoughts on Hyln. This is an EV SPAC. Well, it's not a SPAC anymore. It was a SPAC. Now it's itself.
Got it. Yeah, it's trading sideways. It's just consolidating. So I mean, in this market, so there's a saying, all gaps get filled. Not always true. There are certain gaps that don't. But don't bet against a drop, a gap like this, where it's like from the previous close to the subsequent open. There's a gap in the price. Don't bet against that getting filled. So what I would say in this crazy bullish market that we're in, you can reasonably expect this to get filled after this period of consolidation is digested. So Spencer, what I would say to you is that you can watch this, just kind of watch for it to.
Because I am looking for a re-entry, and so maybe you can give me some guidance on that.
What I would say is buy it if it closes above this. I would buy it above this like $21.76 level. $21.76.
Because that's the bottom of the gap, right?
That is the
the edge, the bottom edge.
actually, yeah. That's just sort of the past significant price level.
Okay.
And then if you do that, just maintain a trailing stop loss, and I think you might be able to close.
Always maintain. I always maintain stop losses. When I don't sleep.
Yeah, I mean, we work full time, so we can't sit in front of the computer all the time. So trailing stop losses are awesome. But what I will say, Spencer, is I don't see like a huge swing or anything. Just looking to close this gap. So I believe that it will close just based on the market that we're in.